prices are rising. Allies are turning away. And the US debt is under attack. Trump's new tariff war is shaking the world economy, but could it also be destroying America from within? In this video, we break down what's really happening and why it might be just the beginning of a financial storm. Japan owns $1 trillion of US Treasury bonds, and China owns $759 billion. Together, these two countries hold almost $2 trillion of American debt. This means the US financial system depends directly on countries like Japan and China. But what if they start selling these bonds? This is already happening. And not only with them, countries like Brazil, Canada, Norway, and India have also started selling American bonds in large amounts. This is not just a loss of trust, it can cause a full economic crisis. So what is behind this wave of sales? Many people think it is a reaction to America's tough foreign policy, which started with Trump's tariffs. If more countries join this sale, it may not just cause a recession, it could shake the foundation of America's economic power. What is really going on, and why is it so important? Let's look into it, but first, don't forget to subscribe to the channel so you don't miss future videos. The United States government is borrowing money at record speed, and this is a big problem for the country's financial future. Right now, the total U.S. national debt has reached $36 trillion as of March 2025. And according to the Congressional Budget Office, it may pass $37 trillion by July 28, 2025. To cover this debt, the government sells Treasury securities. These are basically official promises to pay money back with interest. Both American and foreign investors buy them, because U.S. government bonds are seen as some of the safest assets in the world. Countries like Japan and China buy U.S. debt to keep their own currencies stable and make their products cheaper on the world market. So they don't just store extra reserves, they also earn interest. But this creates a risk: the US government becomes too dependent on foreign buyers. If these buyers stop or start selling a lot of bonds, it could lead to a real crisis. If we look at the numbers, as we said before, the US national debt is now $36.2 trillion. Out of this, $7 trillion is so-called internal debt, money the government owes to itself, like Social Security and healthcare funds. The remaining $29 trillion is public debt, which includes money borrowed from both American and foreign investors. In recent decades, foreign countries have become the main sponsors of U.S. debt. In 1970, they held only $14 billion, just 5% of the total national debt. By 2023, this amount jumped to $8 trillion, making up 29% of the total debt. This shows how much the U.S. has come to depend on other countries to support its economy. But the situation has started to change. Now, foreign investors are selling more U.S. debt than they are buying. Just in January 2025, they sold $13.3 billion worth of bonds, and in December, even $50 billion. The leader of this sell-off was Canada, a country that used to be a stable holder of U.S. debt. What is causing this wave? Rising political tensions and fears of future U.S. sanctions are pushing central banks to diversify their assets. Instead of U.S. Treasury bonds, they are turning to safer and more politically neutral assets, like gold. This is a serious signal for the U.S. If demand for American debt falls, the government will have to raise interest rates to attract new buyers. This will make borrowing more expensive, increase the budget burden, and slow down the economy. Loan and mortgage rates will rise, businesses will find it harder to grow, and households will struggle to pay their bills. At the same time, more budget money will go to debt payments, meaning less money for healthcare, education, and infrastructure. Another problem is the actions of the Federal Reserve during the COVID-19 pandemic. Back then, the Fed bought a huge amount of government bonds to support the economy. In the short term, this helped, but now the Fed is trying to reverse that process and is selling some of those bonds to fight inflation. If this is done the wrong way, it could put even more pressure on the economy. Now let's talk about who is behind the massive sell-off of U.S. government debt. Between November 2024 and March 2025, many countries and big financial institutions sold U.S. Treasury bonds worth about $390 billion. This event was not random, it was a large, coordinated shift that raises serious concerns about the future of the U.S. dollar, America's financial stability, and its role in the global economy. Japan sold $27 billion in bonds, and China cut its holdings by almost $10 billion, reaching the lowest level since 2009. The Cayman Islands reduced their position by $14 billion, and Canada became the biggest net seller at the start of 2025, minus $28 billion. It is especially surprising to see Canada on this list, since it has always been a trusted U.S. partner. But after Trump returned, the relationship between the two countries got much worse. Even close U.S. allies like the United Kingdom, Singapore, and South Korea reduced their holdings, not as aggressively, but the fact itself says a lot. These are no longer isolated actions, it is a global trend. Why is all this happening? At the heart of this crisis is one big problem: growing doubt about the U.S. ability to manage its debt. At the beginning of 2025, American lawmakers could not agree on the budget, and this worried investors around the world. The question appeared: what if the U.S. cannot pay back its debt on time? Yes, it's unlikely, but even this small worry was enough to start a chain reaction. Another important factor is the ongoing trend of de-dollarization. China, Russia, and even some European countries are already moving away from the dollar in international trade. They now make deals in yuan, euros, and other currencies. Central banks are also reducing the share of dollars in their reserves. This is a clear signal: American financial leadership is under pressure, and the results came quickly. The bond market became unstable, and the Federal Reserve had to act fast. The dollar got weaker on global markets, imports became more expensive, inflation went up, and the U.S. stock market also dropped. Investors started to panic, but the most worrying thing is that this sell-off may only be the beginning. What will happen next? If the U.S. does not take urgent steps, the situation may turn into a full financial crisis. America must either reduce its debt or quickly rebuild trust in the dollar, or risk losing its financial power. The return of Donald Trump shows the comeback of protectionism and new trade wars. His administration is again introducing tough tariffs, which break global supply chains. Companies that work in international markets have to change their strategies. Developing countries that hoped for close cooperation with the U.S. now face uncertainty, because American business interests are once again more important than global partnerships. One of the boldest and most controversial moves by Trump is his new policy of retaliatory tariffs. Starting from April 2, 2025, the U.S. will apply tariffs that are equal to or even higher than those set by other countries. The goal is to create fair rules and make trade more equal. But in reality, this can cause serious problems. Prices in the U.S. for everyday goods, from electronics to cars, may rise. Businesses will face higher raw material costs. A company will either pass these costs to customers or lose money. Even American producers, whom Trump wants to protect, may suffer. Other countries will respond with their own tariffs, making U.S. exports more expensive and less competitive. Sales will drop, and profits will fall with them. The world reacted quickly. The European Union already announced plans for a response. China may limit the export of rare earth metals, key materials for U.S. defense technologies. Canada and Mexico, America's closest trade partners, are worried about possible changes in agreements, which may hurt the economy of the whole North American region. If the situation gets worse, the world may see a new trade war that will shake stock markets and slow down the global economy. But this is not only about trade. Trump's policy could also weaken global financial institutions. The World Trade Organization, WTO, which is already fighting for its reputation, may lose authority completely, since Trump openly questions its power. The International Monetary Fund and the World Bank, traditionally led by the U.S., could also lose influence, as more countries look for alternatives to the dollar system. Against this background, China's Belt and Road Initiative is growing fast. More countries are joining it to reduce their dependence on the U.S. The world economy is moving toward economic nationalism, where countries focus only on their own interests instead of working together. China has already placed tariffs on key American farm products like soybeans, pork, and corn. This is a big problem for U.S. farmers, because China is one of their biggest buyers. But China is going further. It also cut imports of American energy and technology products. This means China is trying to depend less on American goods and services, which is bad news for U.S. companies in the long term. On the other hand, Russia is growing its economic ties with China. In 2023, trade between them passed $240 billion, and more deals are now done in yuan and rubles, not in dollars. India is also talking with the EU and Southeast Asian countries about new trade deals to lower dependence on the US market. At the same time, oil-rich Gulf countries like Saudi Arabia and the UAE are expanding economic partnerships with Asian nations. They are building strong ties with China and India, and the Gulf Cooperation Council is thinking about selling oil for yuan. If this happens, the whole structure of the global energy market could change. Even Canada, a close US ally, is not staying quiet. They are discussing tariffs on US goods worth $155 billion. This shows that Canada is serious about protecting its economy. Canada is also working on a new trade policy to strengthen its own market. If they succeed, they will depend less on the US, and this will change the whole nature of trade between the two countries. Financial markets are reacting too. Investors on Wall Street, who usually support less regulation, are now afraid of economic uncertainty. The Dow Jones and S&P 500 indexes show more volatility. Big investment firms are moving money into traditional safe assets like gold, which rose 36% in a year, Swiss francs, and European bonds. The European Union is also preparing its own package of counter-tariffs. The focus will be on famous US brands, motorcycles, whiskey, farm goods, and more. And this is not just a threat. If these measures start, they could seriously hurt American companies abroad. Take Harley-Davidson, for example. The famous motorcycle maker may face tariffs of up to 50% when selling in Europe. This means a model like the Road Glide could cost up to $124,000 in Denmark. And that's not just bad for buyers, it's a big hit to sales. Harley-Davidson may lose a huge part of the European market. America is walking on thin ice, and Trump's aggressive trade strategy may only speed up the fall. So here's the big question: is this the start of a new economic Cold War, or just a painful reset? Share your thoughts in the comments.